Welcome to the Aaron Davis Show, where the journey for tomorrow begins today. And I'm going to share with you a couple of experiences, and this is one experience that I hope brightens your day. And by any means, I don't want to act as if I have all of the answers, but I do plan on winning anyway. And so I thank you for coming along in this journey to building financial wealth for my family and I. And this is just another topic that I want to bring to you and kind of share with you and bring to your attention. I got invested in crypto in about August of last year, and since then I have been very involved in wanting to increase my passive income. And so I'm going to share with you a couple characteristics as to why I align with some of this dividend / staking investments, and I'm going to show you the process of actually staking some Bitcoin on crypto.com, and then finally kind of show you how investing $3,300 a month in the ETF portfolio generates about $30, $32 in annual income versus staking $1,000 in crypto generates about $42 in staking rewards. And so just off of that, staking crypto is a 3x what I am getting based off of the dividends that I'm investing in the ETF portfolio. And then finally, after all of that, I'm going to show you and give you an update on our crypto portfolio for the month of April. So it's a lot to get into. Let's not waste no time, but let's start right now. So the first key thing, and this is where you have to ask if this aligns with the type of investor that you are. And so I'm going to give you a very brief background as to who I am and why staking works for me. And so I own a landscaping company here in the Sacramento region. It's a company, if you're familiar with the folks that go out to the shopping centers, apartment complexes, hotels, whatever the case may be, and do the work, cut the grass, blow edge, yada, 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 provide the maintenance. And so prior to doing that, I was actually a landscaping company that was a lot more project-based. So I would go out, sell a project, do someone's home, do a commercial property, complete renovation, do the work, and then at the end of that project have to find the next job to go to, or I would be out of work. And so I began to find out that I like doing work at the beginning, getting a contract, a maintenance contract, and then being able to receive the benefits of that monetary benefits from that contract for a long time to come. Typically, in our industry, it's a year contract. So, again, I will go out, I will sell the job, and I will get a year contract. And for that year, barring any, terrible service, whatever the case may be, business going out of business, we would be able to have that contract for a year, and that money would come in on a monthly basis. And so I really liked that because I didn't like the concept in the project where I would have to go find the project, do the work, and then as soon as that project came to an end, I would have to go out and find another project. It was kind of, I could never get ahead and have this lineup of 4 to 5, 6 months of projects lined up. I was only a week, 2 weeks out, and I never liked that feeling of not knowing where my next income was going to be coming from. And so that is some of the similarities that I know it's kind of maybe far-fetched, but that is the similarities that grew me towards this crypto investing because, yes, crypto is very volatile, but I like the concept of being able to make some money, put it in a block, stake it, and then every single week on crypto.com being able to get paid for that hard work and never having to go back out and find that money over and over again. And so as I'm going to talk and as I'm going to do future videos and whatnot, you're going to see that the interest that pays out on a weekly basis over the course of time begins to allow you to get these larger and larger blocks. And if you're not familiar with that, I'm going to go over that in the next slide here just briefly. But just understand as these dividends, as these staking rewards are paid out on a weekly basis, it allows you to accumulate a lot faster and therefore be able to make a larger block the next time you restake this block if you're doing the 1 month, 3 month term. And again, I'm going to go a little bit more into example with that. And then, of course, as the value of crypto grows, as the value of any investment, those payouts are going to get larger and larger. And so that, again, allows for the value to be seen on the annual income to grow. And that is the potential that I'm speaking to you about today. Right now, some of the dividends or the staking rewards that pay out is, from 10 cents to $1, 10 cents to 75 cents on a weekly basis. And that's based off of the values that we are seeing right now, as well as the size of blocks that I currently have right now. But as those blocks get bigger, as those values increase over time, Ethereum, Cardano, Bitcoin, Polkadot, Chainlink, as those values grow larger and larger, those payouts are going to be larger and larger. And so just to give you an idea, when I started investing in January this year for the staking side, not just the accumulation side from August to January. I was the first quarter that I followed it, I was only making about $5 a week. And so, again, you might laugh at that and say $5 really isn't a lot, and it's not. But over the course of a quarter, that $5 a week turns into somewhere around $60 a quarter. And on my $100,000 ETF portfolio, I only generated $80 for that same quarter in dividends for my ETFs. And so on a $10,000 portfolio that provided $60 in quarterly staking rewards versus the $100,000 portfolio that provided $80, you see how the power of a dollar can generate a lot more income on this crypto side than it does on the ETF side. So I'm a little bit in the way here. I'm going to scoot myself over, but I'm going to walk you through. This is a video that I just shot on the process of doing a stake. I'm going to show you how I stake a Bitcoin on the Crypto.com portfolio or platform, and so this is it. So let's go right through here and let's kind of talk about this. So as you see here, Crypto.com forces you to stake your coins in certain, they have certain minimum requirements. So for Bitcoin, for instance, is 0.005. You have to have 0.005 of a coin in order to stake that. Cardano is on the other spectrum. Like you need 250 coins. VecChain, you have to have 5,000 coins in order to stake one block. So each coin has a different minimum requirement in order to stake that block. But once you meet that minimum requirement, you can then put those coins into a block. The other thing that you can also do, you're going to see right now, I'm trying to build out and I'm trying to accumulate enough in order to get 12 blocks, which I'm going to talk about a little bit at the end of this slide. But as you get to a point, you don't have to stake just the minimum. You can stake whatever amount of coins you would like to stake. So, for instance, again, with this Bitcoin, the minimum requirement is 0.005. If you want to stake 0.1, 0.5, however much Bitcoin you want in one stake, you have that opportunity to do so. However, for me, I'm going to explain why I want to get to 12 blocks. So right here, I'm just showing you that I have 0.005 of Bitcoin that I can stake. So I have enough accumulated in order to stake one block. So let's keep on going. So once I come out of here, I'm going to then go back to the crypto earn section of the portfolio. Now, what you see right here, I don't know if I show you, I forgot what you see right here are the different, okay, so I went straight into here. So I'll go back to that in just a minute. Okay, this is the next key thing. This is also one thing that I really don't like that Crypto.com actually just changed within the last 2 weeks or so. You have three different options, three different terms. You have a flexible term, which means you can put that amount of coin, whatever amount that you would like to stake, into this flexible amount. And with that flexible amount, it pays the least amount of rewards on an annual basis. However, you can pull your coin out whenever you want to. And then you have a 1 month term and you have a 3 month term. And what that basically means is that your coins are locked up for 30 days or for 90 days where you cannot buy, or well, you can't buy, but you cannot sell those coins within that block for that 90-day period or that 30-day period. Now, you do get to receive all of the upside and downside that the coin does within that period. So say you stake the block of Bitcoin and that Bitcoin shoots up, the value of that Bitcoin is going to shoot up respectfully. So you're not missing out on any upside or downside in the actual coin. However, you just can't literally sell it to take that money out if it's tied up within a block, if you do that 1 month or 3 month option. If you do the flexible option, then you can take your coins out of that block and take advantage of some of that upside that you are currently seeing. Or if you need the money right away, then you can sell it right then and there. But again, if it's tied up for that 30 days or for that 90 days, no matter what, you cannot add to that block or you cannot sell from that block within those two versions. Of course, the other thing that you see here is the 0.5% and then the 1.5 and then the 3%. So for Bitcoin, and this is what I was speaking about where they just changed, they give you up to $30,000 overall to stake. Once you reach that $30,000, which is called Tier 1, they then start taking off whatever block you do and cutting that interest rate in half. So say, for instance, I have $30,000 staked, which I currently don't at the moment. I only have about $8,500. If I had $30,000 staked, the next block that I start, say it was Bitcoin, for instance, I would only be able to receive 1.5% if I went for that 3 month term versus the 3% that I received on dollars invested from zero to that $30,000. So, and this is what I mean by I don't really like, because when they changed this, they brought in this tier structure, as well as they changed some of the interest rates that folks were receiving on the particular coins that they had within their platform. But neither here nor there. I'm not at the 30,000, so I really don't have to come across that level just yet. But once I do get to $30,000 invested or $30,000 stake, I'm going to start receiving half of the interest rate that is available for the select coins that I do stake. Okay, so now let me talk to you about these 12 options, or 12 blocks, because this is something specific to me and why I want. So as many of you might know, and if you don't know, crypto is very volatile. Okay, so it has big moves, ups and downs. And so what I had learned in doing a couple blocks originally is that whether I have one block of 100 coins versus 10 blocks of 10 coins, that amount paid out on a weekly basis is the exact same. The key difference, and as I mentioned to you here before, if you have a 3-month term, you cannot buy or truly you cannot sell, is what I care about in the block when it's tied up. I cannot sell any of those coins. And so I figured out that if instead of doing one large block for 3 months, if I take that large block and split it up over 12 weeks, every single week I would be having another block come off. And if something was wild during that week and that particular a coin was taking off, I can sell that coin and at least reap some of the rewards and some of the upside for one block at a time. Instead of, for instance, I have Shiba. And as many of you might know, Shiba might be, if you're not familiar, it's kind of like a Dogecoin in the sense of it saw a lot of popularity and really spiked. And so you can imagine if all of those coins were tied up in one block and that particular coin spiked up to something very high, you wouldn't be able to sell your coins because it's tied up for 90 days or tied up for 30 days. If you are tied up for the flexible amount, then you don't have to worry about it because you could just take it out, sell it, and then go about your day. But I wanted to avoid that possibility of being tied into a coin, tied into a block, during a time that saw significant upside that I couldn't take advantage of. And so I realized that if I build out 12 blocks with that coin, every single week I would always have at least one block coming off that then I could sell if I saw some outrageous upside in that particular coin. So let me keep on playing this real quick, but I'm going to show you. So I'm going to shoot the 3-month, I'm going to select the 3-month term. There, you see me doing that. This is the crypto earn terms. You just click it, of course. And then as you see here, so this particular stake is 0.005. Now, I do have 0.017 of crypto or Bitcoin available to stake. But again, right now, I don't have 12 blocks of Bitcoin. And so, therefore, I need to basically be able to, I'm going to pause this real quick. I'll talk about that. I need to be able to get to those 12 blocks before I start doing larger blocks and building that. The only one that I have been able to successfully accumulate 12 blocks is Chainlink as of right now. Now, this is what every single week, depending on which day you stake your coins, you get paid out on that day. So, for instance, on Fridays, I get paid out on Solano, VecChain, and Polymatic. And as you can see here, for each block, so this is 1, 2, 3, 4, 5, 6, 7. I have 7 blocks of Solano within Fridays that pay out, and then I have 1 block of VecChain and 1 block of Polymatic. So every single Friday, these are the payouts that I receive on a weekly basis. And then I'm going to just scroll through. I have DOT on Thursdays. I have Ethereum on Wednesdays. I made some purchases this previous Wednesday. Link on Tuesdays. On Mondays, I have Cardano. And so that just kind of gave you an idea as to every single week I get payouts for the different coins that I earn. I didn't scroll. If I would have kept scrolling, you would have saw I already have about 2 or 3 blocks of Bitcoin already going. So those are going to pay out on Sundays. And so every single day, I like to basically be able to earn some type of money from my crypto portfolio. Now, again, Ethereum kind of pays out the most. Polymatic pays out the most on dollar side, whereas Cardano and Chainlink is 2 of the coins where I have the most blocks. But the payouts on dollars is not as much as 1 block of Ethereum and 1 block of Polymatic. So that is what I'm working on thus far. This particular quarter, I think I'm going to finally accumulate 12 blocks of Cardano and I'm going to be right on the cusp of Polkadot to have 12 blocks. And then my 3 would be Chainlink, which I said I'm already done with. Polkadot I'm working on, and Cardano I'm right there on the cusp of having those 12 blocks, and then I will be able to truly be able to get 1 block off every single week in a 3-month period. All right, so this is the meat and the potatoes of this particular show today. And this is how I want to just show you and break down how $3,300 of ETF investments versus $1,000 of crypto investing pays out on an annual basis. Again, this is the annual basis. So I kind of keep going back and forth on you a little bit. When I was talking about that $5 right now, I'm just a little bit over $8 a week. That's on a weekly basis, but this is on an annual basis. So $1,000 invested into these 5 cryptos, Ethereum, Chainlink, Cardano, Polkadot, Bitcoin, will pay out $42 over the course of a year, not on a weekly basis, over the course of a year. So you will have to take $42 divided by 52 weeks, which is going to be somewhere right under $1.80 or so a week that this particular $1,000 invested would be able to pay out on. Okay, but again, I just want to prove the point to you. $1,000 of crypto pays out $42 on an annual basis, whereas $3,300 of ETF investments pay out $32. That's a $10 difference and $2,200 or $10 difference in annual income, but a $2,200 a month difference in investment funds. For that $3,300, this is the portfolio that I'm building out on the ETF side. Semiconductor, clean energy, international, consumer discretionary, healthcare, financials, lithium batteries, just a S&P 500 dividend ETF, utilities, technology, and then industrial ETFs. So these are the different 10, 11 ETFs that I invest on a monthly basis. I have started a playlist, which I'll link up here up top, on the different investments where I go a little bit more into detail as to the different investments that I have and why I am invested in those particular ETFs. In the comments below, I would like to hear from you if you your thoughts on ETF investing versus crypto investing for the income side, not for the growth side, but just more from the dividend, the staking, and the dividend and staking side, and whether or not you are an investor to receive annual income, or if you're just an investor to receive looking for the growth side of these particular ETFs, because or cryptos. If you were on the growth side, at least especially for the ETFs, you might invest a little bit differently than I am invested. And then on the crypto side, I do have a couple of the largest by market cap of the coins. There's a couple ones that kind of spread in between there, like Solana, that is in there, that I actually do have a smaller position in, but it's not one of the top 5 for me that I have invested on a monthly basis. And so now, with that being said, let's just give you a crypto update. As of today's shooting, the account value, as you see there, is a little over $10,000. This particular month, I invested a little under $2,000. As you see, up $1,500. From month over month, I'm up right around 15%. And then the staking rewards is right at $7.84. But I am adding another block in a couple minutes. That didn't include the Bitcoin that I just did, as well as I'm doing another one, Chain. And so between those two, that's going to push it over that $8 limit. And so now I'm making over $8 a month, or over $8 a week. 8 times 12 is 96. So now I have jumped from $60 in quarter one now to somewhere around $96 in annual income for the account, for the portfolio that I have. And our next goal, my wife and I, is to get our portfolio to the $25,000 mark. We had just recently hit the $10,000 mark at the end of March, and so now looking to the next goal to be $25,000. So with that being said, thank you so much for stopping by today's episode. Please take a look at the video that I just did last week on preparing your children for money. And preparing them to give them large amounts of money at the time that they are financially ready, at the time that they are mentally ready for that. So take a look at that video, and then as well as I have a playlist here that should be popping up on the different crypto topics that I've talked about thus far. Look forward to seeing you at the next video. Please give me a thumbs up for the video. Subscribe to the channel if you like the information, and see you on the next one. Thank you so much.